Good day, everyone. Welcome to our next edition of Wolves Weekly. And today it is a great pleasure to have with me one of our SBS faculty, Alessandro Raschellà. Good day to you, Alessandro.
Good day, Dr. Walls. Thank you for this opportunity to share our thoughts.
Well, let's talk about it to see if this is really an opportunity or rather a danger. And that brings us immediately into the topic of this week, where we want to talk about the Corvette crisis, more from a point of view, from a financial point of view, and from a crisis management point of view for what companies can do. So if we look at the meaning of the word crisis, in the Mandarin or simplified Chinese language, it basically has a double meaning. On one hand, it says it's a danger. On the other hand, we talk about an opportunity. What is your point of view on this?
Well, I'm personally a big fan of crisis, but allow me to explain in what way. Crisis redefine the way we can look at business, meaning that if you approach the crisis in the right way, they can be a great opportunity. But of course, it requires the right approach to it. What I notice is that most business, particularly small, medium enterprises and managers, they're not very proactive. They passively suffer the crisis itself. They're not willing to take initiative or change the way they run their business. And in that, with that approach, we can clearly see that crisis is a danger. On the other hand, there are a few managers and companies that are able to seize the opportunities offered by the crisis. And I really would like to recall an extraordinary transaction that happened during the previous crisis when the back then Italian group Fiat acquired Chrysler during 2009. Thanks to that, a company that was, I would say, mainly a European player suddenly became a global player. And if you're able to catch the opportunities offered by the crisis, then crisis, yes, there are good opportunities. So the Mandarin way of looking at the crisis is really inspiring. Of course, it's important during a crisis to position yourself in the right way. And from that, finance can really give great support. What does it mean? It means that we must move from managing the company from an income statement, a P&L, rather with a higher focus on balance sheet and cash inflow and cash outflow. Liquidity is particularly in this moment, and particularly in the current crisis, where the measures implemented by the government kind of stopped in worst cases or reduced the business activity. Liquidity is the key to surviving during difficult times. So it is important to review or even prepare from scratch a new cash budget, producing a rolling weekly or monthly cash report, centralizing within the company the decisions that affect cash outflow. Other things, clearly again, since we are moving more from the income statement to the balance sheet, it means to tightly manage your customer credit and working capital on a broader perspective. Harder to do, but possibly more important, is to optimize your capital structure, your financial structure, meaning the liabilities side of the balance sheet. You should try to reduce debts and other liabilities. Make sure that you're able to secure the access to lines of credit if you can afford. Otherwise, it would be incredibly important to secure the access to equity, new equity, share capital injection, with the goal of, again, rebalancing your capital structure for this new normal. Why this? A sudden crisis bring losses, and losses reduce your equity.
So if I can summarize in 3 points, cash is the king. Know who are your customers and try to keep vital lines with them, that they continue to pay the banks, to pay you your bills. And in case you cannot, make sure you have a credit line with a bank which ensures the survival of your company. Now, as you said before, we are going into a world of new normal. New normal means, what does it mean? Is that meaning less capitalism? Is that another way of doing business? Or because if we look at the ratio of companies who are complaining that they have a lack of cash, it's actually scary to see that. I'm not afraid of the coronavirus, but I'm afraid of the amount of companies who are complaining that they don't have enough cash to survive 1 or 2 months during these times. So what will be the new normal, if there is a new normal, or is it just old disasters who are picking up again?
Well, personally, I don't think there will be a new normal as a finance expert. Companies already in the past were supposed to do everything I said. Look at their capital structure to manage their liquidity. There is a problem. Growth, expansion, economic expansion helps forgive a lot of mistakes. During a crisis, we simply highlight, we show what we did wrong in the past. A company with a sound cash flow management and a good capital structure, yes, will suffer from the crisis, but will definitely survive. A company that was, on the other hand, doing things poorly, if not wrongly, then will have to change quickly, and let me say again, quickly. We'll have to implement new way of running the business. So I don't think there is a new normal. I simply think that companies were not doing right before.
If we look at the American stock market, for example, that's my personal opinion. I'm not saying that that is the truth, because I'm not a finance specialist as you are. But if we see the market, especially the last year, growing so exponentially, was partly due to the fact that these American big companies were buying back their shares. I tried to calculate it. It was about $1.5 trillion they have invested in buybacks, also because partly due to the tax incentives and all this money is gone now. They should have better kept the money in cash, do investments in new product development and all this. It would pay out its fruits today. Do you think also that after the crisis, the acute crisis, do you think that there will be more mergers and acquisitions?
I think so, yes, definitely. You mentioned large US companies. Yes, they were doing a lot of share buybacks. Most probably in the near future, they will privilege cash dividends rather than share buyback. But those companies, they do have access to a lot of liquidity. It means that for them, exactly like in the previous example I gave, it will be very easy to go on the market and acquire struggling competitors. I would like not to discuss the current trend in the financial markets because I believe financial markets are smart, but only in the medium term. So I have a lot of our students contacting me asking like, where do I think the market will go? That's not my job. I'm not going to make any forecast on this. But yes, I believe, and that is one of the tools that companies have available in order to face crisis, that there will be a new wave of M&A, even if this new wave of mergers and acquisition will have a completely different shape. It will be most probably mergers and acquisition, either merge to become bigger, to be able to better take the hit of the future uncertainty, or it will be a healthy company subscribing capital injection of weaker companies in order to take over some good assets that cannot perform due to a wrong capital structure.
Okay, so it's almost like the people. Rich companies will get richer, and poor companies will die. The same thing like we have with the people. Poor people, unfortunately, will post-crisis get poorer, and the rich will become richer.
I totally agree on this. I don't even know if I should say unfortunately as a finance person. I mean, like you pay for your own mistakes, and this worked for the past few centuries. Yes, rich will get richer, poor will get poorer. The good thing is that it depends on us. So if we are able to understand what is going on, we might suddenly move to the other side of the table. It takes change.
So there is a saying that in times of crisis, the poor people buy toilet paper and the rich people buy stock. So it looks like you confirm that.
Yes, I do that for several reasons. I mean, like if we look at the measures that governments are currently implementing all over the world in order to sustain the economy during this period of uncertainty, this crisis, the amount of liquidity that will be put in the system is huge. But we should also really check who is going to benefit of this liquidity. To access the liquidity that governments, in the form of debt, but still liquidity, has made available, you must have the credit merit, meaning that this liquidity will go to those guys that most probably do not really need that liquidity. Who really need that liquidity most probably will not have the access to it.
That is very unfortunate. So in order to wrap up our conversation, can you give 3 or 4 tips how those companies and also our students who are in financial positions, what would you recommend them to have better instruments and more protected for the next crisis from a liquidity point of view for their companies? What 3 or 4 tips can you give them?
Let's focus on profit, more on the cash flow. Look at your capital structure in order to catch the opportunities offered by the market. Review as well the assets you're managing. Get rid of unprofitable or non-core assets in order to generate the cash you might be you might need to invest for your future growth. Shrink before you grow again.
Uh-huh. Well, Alessandro, always nice to learn from you. Thank you very much for these tips. I hope our audience can use it in their professional life. And let me end with a wonderful phrase which is in the framework of this conversation. Stay rich because you're healthy right now.
Thank you, Dr. Wolf. This was a beautiful way to close it.
Thank you. Bye-bye.
Bye.